Will more of your Social Security check be tax-free? Hello, members, super savers, and Bond Course fans. I hope you're healthy and well. So a bit overlooked in all the ongoing tariff drama that started with President Trump's Liberation Day announcement last Wednesday was the fact that the Senate, in the early morning hours of Saturday this past weekend, took one more step towards finally enacting a budget for our country. And yes, Social Security was in there. Now, advancing the tax bill, as Congress calls this successful vote in its insider language, doesn't necessarily mean we'll have a budget soon. In fact, we're still talking about a budget draft here that got approved and everyone's still fighting about it. And it may take a while anyway before we have an agreement between the House and the Senate down to the last detail. But we'll leave the wider discussion on what's in the budget draft overall and what it would do to our deficit for another video. For today, let's focus on one particular topic in the budget draft that interests quite a number of you. Would the budget bill, as it's currently drafted, actually make good on President Trump's promise to eliminate taxes on Social Security? As usual, here's our front video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. As a reminder, Social Security checks were initially completely tax-free, and they only started getting taxed in the first half of the 1980s as part of the reforms signed into law by President Reagan. But even then, the law shied away from making Social Security payments completely taxable. Instead, it introduced a somewhat complex system that kept some or all of the payments tax-free. You can see how it works in principle from this table here. In this column is your federal tax return filing status. In this column is your combined income. And in this column is the percentage of your Social Security benefits that may be taxable. And in essence, if your filing status is single or individual, starting from a combined income of $25,000, an increasing share of your Social Security income will be taxable. And if your filing status is married filing jointly, starting from a combined income of $32,000, an increasing share of your Social Security income will be taxable. And this taxable share goes up quite fast, reaching the maximum taxable percentage of 85% from $34,000 in combined income for a single filer and $44,000 in combined income for a married couple filing jointly. And just to make it clear, this 85% here is not your tax rate. It's not what you pay to the IRS. It's just the proportion of your Social Security check that you will have to pay taxes on. So even in the highest income brackets, only 85% of Social Security payments are taxed, while 15% remain completely tax-free. So it may still be a bit better than for your fully taxable income streams. And if that wasn't confusing enough, the combined income in this table is not the income that you would declare in your normal tax return. The combined income is calculated according to this formula here that the Social Security Administration shows on its website. In essence, you have to add non-taxable interest, for example, from municipal bonds, and half of your Social Security benefits on top of your regular adjusted gross income, which means that you may reach the next higher income bracket even faster. That said, the taxation of Social Security benefits has always been extremely unpopular, as people consider it unfair and detrimental to their retirement. Plus, many new retirees are surprised to find out that they have to pay taxes on Social Security benefits at all, and shocked when they're hit with a tax bill from these very low thresholds. On the internet, this effect is often called the retirement tax torpedo. It may hit you hard when you expect it the least. It's perhaps no surprise then that President Trump made no tax on Social Security one of his more prominent campaign promises. Now, while many in our community would probably agree that there is a good case for making Social Security tax-free again, as it used to be before the 1984 reforms under President Reagan, this is not what the current draft budget envisions. As it currently stands, Social Security payments would remain taxable, but there's a glimmer of hope for the retirees in our community. The thresholds from which taxation begins could be increased. And this would be only fair as these income brackets have not been adjusted at all since 1984 and look now hopelessly out of kilter after more than 40 years of inflation. as the Social Security Administration points out on its website, not indexing the thresholds and income brackets has meant that since 1984, the proportion of beneficiary families whose benefits are taxed has risen over time from less than 1 in 10 to more than half. Now, the current budget draft does not really define what the new thresholds or income brackets could be. That will need to be agreed in detail between the Senate and the House as the discussions continue. And to say it once more, there's no guarantee that any increase will be passed at all, but more on this shortly. Still, and without raising too much hope, let's have a look at some proposed bills that have been introduced to Congress over the past few months to get at least a rough feeling for what potential new income brackets could look like. So, at the current time, for single or individual filers, Social Security taxation starts from a combined income of $25,000. And for married couples filing jointly, Social Security taxation starts from a combined income of $32,000. Under the proposed Trust Act, which stands for Tax Relief Unleashed for Seniors by Trump, the current thresholds for taxation would simply be doubled, which would mean that for single or individual filers, Social Security taxation would only start from a combined income of $50,000. And for couples married filing jointly, Social Security taxation would only start from $64,000. Under the separate but related Retirees First Act, the Reducing Excessive Taxation and Inefficiencies by Reforming Elder Exemptions to Support Fairness, Inflation Relief, and Simpler Taxes Act. Ooh, that was a mouthful. For single individual filers, Social Security taxation would only start from a combined income of $34,000. And for couples married filing jointly, Social Security taxation would only start from $64,000. But as I said, though, this is still not final. In all likelihood, the House will make amendments to the 2025 budget that the Senate has approved and send it back to them for further negotiations, meaning everything is still subject to change. I, for one, will keep all fingers crossed for the retirees in our community. As the saying goes, don't count your chickens before they're hatched. A lot can still go wrong. In fact, nothing may even change at all, and we may end up exactly where we started, with these existing income thresholds here, especially given that the federal government doesn't really have any money to give away. The Nonpartisan Committee for Responsible Federal Budget is already sounding the alarm, as you can see here. Senate budget could enable unprecedented deficit increase. So who knows what may be trimmed away in the next rounds of negotiations. What do you think? Should we increase the income thresholds and brackets for Social Security taxation? Or should we make Social Security payments completely tax-free? And the more interesting question, how should we pay for this in the budget? Would you increase the rates and or maximum contributions that employees might have to pay? Or should we even think about privatizing Social Security? Drop a comment below and let me and the community know. All right, members, super savers, and bond course fans, I hope you enjoyed this video and learned something new. And as always, if you want to learn more about how to build a stable, predictable income stream in times of market uncertainty and volatility, then check out this video here on our bond courses. And come join our next live member Q&A on Saturday, April 19th at 5 p.m. Eastern Time, 2 p.m. Pacific Time. We'll be diving deeper into the 2, 5, and 7-year T-note auctions and all things fixed income. I've also linked all the details on our bond courses and YouTube Super Saver membership below this video for your convenience. See you again very soon with more brand new wealth building content for your financial journey.